there's a lot of benefits and tips and tricks, I guess, to targeting an audience that would be interested in investing with you. So, of course, there's being consistent on social media, picking a niche, and also being very intentional about your marketing strategy to target that niche.
Hello, and welcome back to the Very Real Estate Effect podcast, a show dedicated to real estate investing right here in Canada. And yet today we have a wonderful guest from the US. I'd like to welcome Dasha Beardsley to the show. Hi, Dasha.
Hello. Thank you so much for having me on.
So it's a pleasure to have you on. You are in charge of investor relations and marketing at Lone Star Capital, based in good old New York City. And today we're going to be talking a little bit about capital raising and how you guys have positioned your firm and so on and so forth. But before we jump into it, Dasha, I just want to remind everyone, thank you everyone for listening to the show year after year, episode after episode. Please share this episode with a friend who could benefit from this conversation, as Dasha is going to be sharing many valuable tools, insights that others can benefit from. Leave us a review, send us some comments and some questions. We try to address everything we get. So, Dasha, being in charge of capital raising, of investor relations and marketing, you're talking to a lot of investors. Like, how in the world did you get into this?
Yeah. So I guess just going back, I studied real estate development at USC. So that's what I got my degree in. Simultaneously, as I started university, my older brother, Rob Beardsley, which is the founder and one of the principals of Lone Star Capital, partnered with his business partner, Kent, and they started Lone Star Capital. So I was investing along the way. I had some jobs in college, and I was investing whatever I could into Lone Star's deals, but I never really thought that I myself would be working full time for the firm after college, but it just kind of slowly happened that way. My career started out on the marketing side, which I think is a really interesting way to start out, because I learned so much specifically about marketing to investors and learning what works, not just on LinkedIn, but also what is bringing in leads. So I think that was actually a very efficient and productive way to kind of learn a lot before I get into the investor relations side. So that's how I slowly kind of worked up into investor relations, and now I still oversee marketing, but I'm not directly doing the marketing.
Yeah, for sure. It's a great springboard to be able to come into investor relations, having been on the marketing side, because it really does show you the deal pipeline, not so much, but the investor flow. So that's a really good way to get started. So for those who are not familiar with Lone Star Capital, what do you guys do?
Yeah, so we're an owner-operator in Texas. So we buy only multifamily properties in Texas, specifically in Houston, San Antonio, and Dallas. And that has been very intentional that we don't go outside of those markets, because we want to be really focused. And there's a lot of benefits to us being focused geographically. Largely, that has enabled us to have property management in-house relatively early on in our growth as a firm. So, we're proud of that, and having in-house property management, that's really helped a lot with transparency we're able to provide to our investors, and just having more control over the operations of our properties. So that's what we do as far as the property type. We also specifically work in workforce housing. So that's kind of the naturally occurring affordable. There's a little bit of a range there. It's not always naturally occurring affordable, but we're not typically going for Class A properties in a prime market like Los Angeles. So that's what we do. And as far as our equity, we syndicate from a variety of investors, small retail to larger family offices and institutional partners.
Okay. I'd just like to go back, because that's a term we're not really familiar with in Canada. You said workforce properties? What do you call it?
Workforce housing.
Workforce housing. Can you kind of describe what kind of asset class that is? I mean, is it just affordable?
Yeah, specifically the tenant demographics are more blue collar
Yeah.
workers. So yeah, that's kind of what that means. It's not an official asset class.
Yeah.
It's more so just describing the tenant base of these properties.
Okay. Yeah, in Canada we just call it affordable.
Hmm.
And we have a lot of affordability factors now for financing and stuff like that. So,
Right.
okay. And so again, you started marketing. You are very laser focused on certain areas in Texas, and then you moved on to investor relations. What does that really mean?
So I like to think of it as there's three different roles within investor relations. So one is creating new initiatives and overseeing projects for getting new investors. So I think that's really how my role in marketing ties into investor relations. But that also can mean hosting events, some maybe cold outreach campaigns that also kind of uh, relates to marketing. And then the second is investor services. So just providing service to your investors, the monthly updates, financials, all of that. Not necessarily that I'm creating the financials, but servicing
Yeah.
that to our investors, answering their questions. That's kind of that ongoing relationship management. And then
Mhm.
there's also more of the sales side of it, where actually converting a lead into an investor. And yeah, basically that's pretty self-explanatory.
Okay, so your brother goes out to find properties, and you have to fund them.
Well, luckily we work together.
Mhm.
Rob also is on the investor relations side. He's on acquisitions as well, but he works with larger investors as well. And then we also have a director of business development who he does more of the sales. So I do some of that as well, but there is overlap, but he does more strictly sales.
Okay.
So luckily it's not all a burden on my shoulders.
No, of course, and that's why you're a team, so you can share those responsibilities. Would it be okay with you if we dive a little bit more into the capital raising effort? I mean, raising capital and getting investors to buy into projects is, I like to say, an art form.
Yeah.
And can you kind of walk us through how does it work for you? You guys, what's your average raise in terms of size? How long does it take? How do you go about it? Kind of share a little bit with us for all those who are listening who may be starting out and in the process of raising capital, so they can walk away today after this episode with a few golden nuggets.
Yeah, so it's difficult to say what our average raise is like because there is a wide range. I'd say, like, for example, we just closed a deal that was the raise was 9.5 million, but then the one before that was 39 million.
Oh wow.
So
Okay.
39 million was definitely on the very high end for us, but
Mhm.
there's a wide range, and we also it's hard to say because once we just get a deal under contract, we're going to do whatever it takes to close and get that equity in. So it's hard to say what's average because we basically just push ourselves to do whatever we're putting under contract, and we've been able to do it, thankfully. Um, but as far as the capital raising process, I think a lot of it happens before you actually have a deal.
Mhm.
Not just I think, I know because we've been doing it for years and we've been planting seeds and creating leads for years prior to actually some of these investors coming to fruition and actually funding a deal. It's not always the case. Like some investors have a much quicker turnaround time, but some will want to watch you for 4 years from the sidelines. And I think also as we um, just put more effort into it and focus further on capital raising, we're able to potentially decrease that time frame. So, for example, sometimes if you proactively reach out to these people, follow up more, they may be always intended on investing with you, but a lot of the times people it's kind of an afterthought, they don't know, they don't really feel like having a second job and diving into the numbers, whatever it may be. So as with any other type of sales role or sales funnel, there has to be some more proactive approach, and so that's what we've been doing a little bit more of. And so I do think that we can shorten that life cycle, but
Mhm.
generally speaking, it's really important, I think, and what has been really important for our success is creating value so that our investors come to us rather than us trying to chase them down and do cold calling outbound sales.
Yeah. Yeah, no, definitely. And there's so many different facets to that. And the best ones are the referrals, is the happy investor
Mhm.
who told three of his friends, and then they all call you with 500,000 each. And those guys are already sold. They're basically
Right.
begging you to take their take their capital.
Yeah, those are
Um,
the best.
yeah, much easier. It's interesting what you said with regards to shortening the raising process, because a lot of people think of it as, well, first I need to go get a deal and then I'll go and pitch it to investors and stuff. And the importance, as you said, of planting seeds along the way, because different investors have a different turnaround, have a different investing horizon. And I remember talking to a family office that said, oh, yeah, that's great. You have great deals. We'll watch you go for 3 years and then let's
Yeah.
have a conversation. And that's a bit taken aback. I was like, no, no, no. I'm talking like 3 months from now, you guys should be coming in.
Right. So
So
you wish you were reaching out to them 3 years ago.
well, exactly. And then also about the type of information that you share with them, of like, updates on projects, upcoming other possibilities and properties that are coming on that you're looking at, other developments, and so on and so forth. So when you say you plant seeds along the way, what does that look like for you?
So, a lot of what we do as far as marketing is on social media. So, a
Hmm.
lot of our potential investors follow Rob specifically. That's kind of our main social media marketing is on Rob's accounts, and so they'll watch his videos. We put out 5 videos a week just on LinkedIn. We also do text posts and snippets from his book. So
Hmm.
creating value that way and just kind of keeping top of mind specifically on social media. We're also on like every social media platform you could think of. And then as far as people who've already entered our funnel, that includes we send out an email at least once a month. We send a monthly letter,
Hmm.
newsletter, I mean, where we send out updates on us as a firm. We send out updates on deals we're doing, and also we previously um, changed this, but pretty much since the beginning of Lone Star, Rob has been putting out an article each month.
Hmm.
Instead, now we're just picking one of our favorite podcasts from the past month. So we put that as kind of the main thing to share in our newsletter.
Okay. Okay, and those are the touch points that you regularly have with all those who've entered your funnel. We talked about family offices. I mean, for the size of the raises that you're doing, you're not looking to raise $25,000 at a time. That's for sure.
Right.
So, other than family offices, like what kind of slightly larger investor are you targeting? That's not necessarily institutional.
I would say family office is kind of in that middle. There's a large range of check sizes. You know, family offices, there's a lot more nuance
Hmm.
um, with what they're looking for, when they're looking for it, and how much they're willing to give. Like their strategies, I think, are a bit more varied than larger institutional groups. But yeah, I would say we're pretty much like we're looking for anywhere from a $50,000 investor to institutional JV, and we've done all those different types of deal structures. And we also have combined them. So it just really depends.
Okay, depends on the deal size, the asset class.
Mhm.
Have you ever had occasions where you had large enough investors who just wanted exclusivity?
Yes. Yeah. We've done
Okay.
that before.
Mhm. Okay. Yeah. Well, so many different different ways to go about it. If just before we started, we talked about the different ways to raise capital, i.e., are you an operator or are you looking to raise capital through other raisers? And I think you've kind of started being an operator, and now you also work with other capital raisers.
Yeah, that's correct. So I would say there's a lot of overlap um, between the two.
Hmm.
So if you're a capital raiser or if you are just an operator starting out, there's a lot of benefits and tips and tricks, I guess, to targeting an audience that would be interested in investing with you. So, of course, there's being consistent on social media, picking a niche, and also being very intentional about your marketing strategy to target that niche that you're interested in. Um, However, I do think that there's a little bit of a nuance if you're an operator and you want to work with capital raisers and fund of fund managers
Hmm.
or fund managers. There is slightly, I guess, an increased standard that you need to uphold
Yeah.
because these people they're I don't want to say they're institutional, but they're more sophisticated and they're in the industry, and so you need to appeal to them specifically. So it is a little bit of different marketing, which I think our marketing, which includes Rob's 2 books that he's published and just kind of very high level educational things that we do, I think it targets more of those fund managers. So we end up working with a lot of them.
Yeah. And for those who are not familiar, can you explain what is the fund of funds?
The fund of fund is a structure where an operator, so like we would have an LP, which is where all of our investors investing directly with us would invest into. And then there are fund of funds, which is basically a fund manager, someone who raises capital and has their own set of investors, creates a fund for that deal. It could also be an ongoing fund, or an evergreen fund that, a fund manager can set up that they would be able to use for all of our deals. It depends. There's different ways to structure it, but what we're seeing most common right now is that the fund manager would create a specific fund for that deal, raise into it, have their own PPM, have their own subscription agreement and all their offering documents, and then they would invest as one check into our LP.
Yeah. And so by the time it comes to you as one check, they've actually syndicated 12 other people in the back, but to you it's much simpler because you just have one intermediary, but one point of contact.
Yes, exactly.
Are you familiar with kind of the fee structure? Like, I think there's a lot of people that aren't necessarily familiar with this structure. Like, and that might be too detailed, but like a fund manager who manages a fund like that, what is? Well, I was gonna say their incentive is obvious, but do you know on average what kind of percentage do they take?
So it's not necessarily a percentage of the profits, but usually they take an upfront acquisition fee, which comes out of the raise that they raise. So, for example, if it's $1 million raise that they raise from their investors, they would take a 2% acquisition fee. So that would be $20,000. But the way that it works is basically we offer enhanced terms to these fund managers, and then they offer basically the same terms that our LP investors would get, and so then they get what's on the top.
Okay, so they take a little bit of the top of the waterfall,
right? And so I think what's important for this structure to work is that to ensure that the fund managers investors are getting a similar return as to what we're getting.
Yeah.
Or sorry, our investors are getting investing directly with us.
Yeah. And it gives them the incentive exactly to go get more and to raise more capital and to work with you, because then they just have to gather up the funds, but you guys syndicate and operate, which makes it a lot easier for them.
Right.
What is let's say you come back on the podcast 2 years from now, what is it that you'll be hoping to share with us and Lone Star, about Lone Star rather? Well, you, Lone Star, you get the question.
That's a good question. So you mean like our goals as a firm?
Yeah.
So within the next couple of years, we definitely want to hit 1 billion assets under management, which I think is doable if we're able to continue at a pace similar as what we've been doing before. But for me personally, I've been wanting to dive more into and attract more 1031 exchange investors. I have worked with a few, and that is actually a really decent source of our equity that we get. And I guess it's probably different in Canada. Do you guys have 1031 exchanges?
No, so it doesn't exist, but most people are familiar with it. We have other tax advantages, but not this one.
Okay, I see. So yeah, I'm just trying to, it's such a fantastic vehicle for preserving wealth, and, it's an amazing tax strategy, and it's been a great source of equity for us. So, I just want to kind of figure out, that's kind of my niche that I want to target. So for me personally, within the firm, that's something that is a goal of mine.
Yeah. And as you said that, it makes a lot of sense. It's a really good idea. I'm just not sure, like, how would you go about specifically targeting these people? Because in a way, you're just encouraging them to sell what they have now to come and invest with you. And naturally, it'll become a 1031.
Well, I think that a lot of 1031 exchange investors or potential 1031 exchange investors don't really understand that what we're offering exists.
Mhm.
first off. Also, a lot of the times other operators similar to us, they don't offer 1031 exchanges. It's kind of too big of a headache, and or they have a higher minimum than what we do.
Okay.
So there's barriers for 1031 exchange investors. And I think also what's just more widely known is the DST structure, which is different. And I think it's more, I actually am not very familiar with it because we haven't done it, but I think it's more of investing into a real estate trust
Okay.
and more kind of fractional shares
Mhm.
versus we do a tick structure, which is tenancy in common. So they're actually directly investing into the property.
Mhm.
So, yeah, I would say as far as directly targeting them, just putting out more things on social media that educate people on what we offer, and that will kind of, hopefully attract more of them. And then I think also we haven't done really any ads but before, but I think that there's a lot of benefit to potentially
Yeah.
doing ads and specifically targeting people who are maybe searching 1031 exchange. I don't know. I'm still exploring.
Yeah, no, it's a really good idea. And it's going to take some trial and error. And it might just be as simple as you said, taking some ads and doing a good SEO push behind it and seeing
Mhm.
what comes out of it. It's the beauty of the internet now.
Yep.
Dasha, thank you very much for all these insights. If anyone is interested in continuing this conversation, what's the best way to get in touch with you?
Yeah, my email is Dasha, DASHA at LSCRE. And then we also have an investor forum on our website, which is lscre.com.
Wonderful. Well, if anybody who's listening wants to know more about your operations, your properties, and your deals, they can go directly. I think it's Lone Star Capital, LoneStarCapital.com.
It's lscre.com.
Yeah, LSC. Okay.
Mhm.
Wonderful. Thank you very much for all this, and for all those who are listening. As usual, keep researching your market, keep making offers, and I'll talk to you next week. Thank you.
Thank you.